Is credit score relevant to your price in insurance? It turns out it has been, but it doesn't need to be. Stick around to learn why not.
Loop doesn't use credit score because it's an irrelevant factor when it comes to you being involved in a car crash. Certainly not as relevant as whether you're speeding or hard braking in really bad intersections that have crashes all the time. We all know those roads. We all hear the traffic reports when we tune in the morning. Where you're driving and how you're driving is way more important than whether you've repaid your debts or missed some bills.
The problem though is that the industry has largely relied on credit score because that was the information that was available in the past. There's some correlation, but there's a difference between correlation and causation. What we're saying is, hey, you've been relying on information, old information that was available to you then, but today we have all new kinds of information that's more dynamic, it's richer, it's more modern. So for example, when the existing industry models were made, we didn't even have cell phones. We didn't have Google, we didn't have location technology, we didn't have telematics, we didn't have any of that. So all we're doing is saying, hey, let's get rid of these factors that make no sense to include, keep the ones that do make sense, for example, your age, because it's correlated to your experience and so on. But now let's add some new modern measures, such as your actual driving behavior and where you're driving. If we can develop an understanding about how you are as a driver with these new methods, we can ditch these old methods for good. Loop makes a pledge to never use credit score in any of our pricing or underwriting of you, our customers. So the B Corp movement, what is it? Why do it? And what does that look like in this current environment, 2021 and beyond? Social responsibility, equity in financial services, representation in media, these are things that are no longer nice to haves. These are consumer demands. I think we have hit a point in our society, in our history, when consumers demand more from the companies that they support with their hard-earned dollar. So what does it look like to be socially responsible? It looks like paying your employees a living wage. It looks like going even beyond that and saying, hey, our team member gets shares in our company. It means ensuring that you practice sustainable practices if you produce physical goods. It means, the bottom line, that we are no longer running businesses that are purely motivated by profit. We have to have double bottom line businesses that measure profits, but also purpose.
And we're not naive that selling car insurance really is damaging the environment, polluting our air, our water, depleting resources that we need to prolong, human existence on Earth. So one of the things that we've done proactively at Loop is to actually incentivize hybrid and electric vehicles and introduce one of the first ever discount to drivers who choose to buy electric or hybrid. We want to commit to a more sustainable future. It's just one small way that we can put our money where our mouth is.
Yeah, but there's so much more beyond that. It's not just about climate change. It's about time companies put their money where their mouths are at across the board. Otherwise, consumers will not be spending their money with you. We've hit a new height of the corporate social responsibility movement. I would go as far as to say that if you do not take a stand for something, you will go out of business to a company like ours that stands for our values and what matters to the community.